Hey guys, thanks for stopping by here at thetradinganalyst.com. This is Taylor. We're going to take a look at 5 stocks here that I think at some point in time are going to be good short candidates. Okay, so first we're going to take a look at Netflix. I'm going to move my face out of the way a little bit over here. Okay, so Netflix currently right now, this is after hours trading. So, you know, it could open up tomorrow down, for example. That's wouldn't surprise me. I'm not saying that is going to happen. I'm just saying right now we're at 309 in after hours trading. Oftentimes you get whipsaws with after hours trading with an earnings reaction. Okay, so I think Netflix, while we're certainly, I think in the short term, if today's price action holds into tomorrow, I think it can head higher. Okay, I definitely think it can head higher in the short term. But with that said, I also think it's going to be a good short once it heads higher. I've been bearish on Netflix really since up here when I was at 380, and I called for lower prices. That was before this big gap down right there, and it headed much lower. It hit our target down here at this support around 260. Ultimately, I do think it'll head even lower than that. I do like to focus on price action primarily, but sometimes I like to apply just some common sense here. And Netflix, it enjoyed being the only game in town for many years, and that's why the stock performed so well. Yes, Netflix has some really great content, but so does Amazon Prime, so does Disney, so does, who else? I don't know, there's a bunch of other streaming services out there, HBO, Showtime, and the fact of the matter is that Netflix didn't have that competition until just recently, okay? And that's why when we got up here, as the rest of the market kind of blasted off, it kind of traded sideways. I said, okay, well, I think it's going to head lower right here because it's not taking off with the market, okay? So just imagine what it's going to happen if we see some kind of a bearish move in the market. I think it's going to head lower. That's exactly what happened. Big dump lower, $120 lower from where I called for a downside move. Anyways, getting into the more recent action, if we continue higher here for Netflix, we've got a downtrend line up here. Started there, rejected here, rejected here. That lines up right around 360 right now. All right. We also have a gap fill right here. That's the gap fill at about 360. So gap fill lines up perfectly with that downtrend line. We also have, move my face out of the way, a Fibonacci retracement level. If you draw it from the major high here to the major low right there, you can see that 61.8 Fibonacci retracement level lines up right around that 360 area. Okay, so this is the zone between about 350 to 370 where I think Netflix is going to be a good short. Again, we're way off from this level. Who knows if we're even going to get up there? But I know that to me, that's the best risk versus reward short. I don't want to short it just after it reported some positive earnings. I don't want to short it now. I want to short it after it's been exhausted and it comes right back into this major resistance that it hasn't been able to break over for more than a year. All right, so about 350 to 370 on Netflix. That's the area where I'm looking to short. The next one I want to look at is Coop. And what we have here, let me zoom out a little bit. Okay, so what we have here is, I'll move my face out of the way, a couple of things that are happening here for this stock. First and foremost, we have a false breakout. Okay, here is this resistance. All right, resistance, 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 resistance. We clearly break over that right here. Clearly break over that. And then we broke right back under it with this huge gap down and very strong red day closing near the lows with big volume right here. All right. So not only that, but this last gap up that we saw right here was with some heavy volume. See that volume right there? But what happened after that? We headed lower. Okay, you could argue that eventually we headed higher, so maybe there were some buyers there, and especially because we broke those highs. But now we're back below that level. So see how we broke? There was that level right here, broke over. Now we're below that low. So now we have two bearish, big bearish volume days right here. All right. If this was buying volume, we would have headed higher from here. But no, we came down, headed lower, made a new low, kind of messed around here, made a new low, and then we headed higher on lower volume. All right. And you didn't see the high volume until we headed lower once again. Here's another high volume day right here. These 2 days. Boom, boom. Okay. High volume days. Look at this. Down here. Boom, boom. Those 2 days. And what happened after that? Boom. We headed lower. All right. Same thing happened here. All right. So I think Coop is going to head lower. To me, just because of how big of an uptrend it's been in, I'm not calling for some kind of big crash or anything like that. I think that it could head much lower, but that's not something I want to bet on just yet, because it still has a lot of support right here. But so this is kind of just a short-term level here. I'm expecting about 126 to get hit in the near term. Okay, that's Coop. The next one is, let's see, Crocs. All right, Crocs. So this one, I'm going to pull out the 10-year chart. All right, and notice that these stocks, Netflix was once a leader, but right now it's clearly not acting like a leader. Okay, you've got Apple and Google and Facebook and Amazon all performing so much better than and Microsoft and JP Morgan, Nike. Those are all leader stocks, and they're all performing really well. The stocks that I'm looking at to short are not leaders of the market. Okay, this is Crocs. This is a company that makes plastic shoes. Okay, so we're going back 10 years of action. So let me see, 20 years. Okay, so yeah, we only need. Well, this is a good chart to show. Okay, so this is 20 years of action for Crocs. Okay, we had this initial hype here for the IPO, but then it sank. All right, and then we came up to this level right here and got rejected. All right, a couple times right there, and again right here, same level, right around 31, 32 bucks. Same level, we came in and got rejected a couple times right around the same level, and look at where we are once again. We're right here at that resistance that we have never broken over once we, other than that initial hype period. You know, it went from, what is this, 10 bucks to 77 bucks. That's crazy, crazy. But aside from this initial hype period in the beginning, you know, a lot of stocks get hyped up in the beginning. Other than that, we've never been above 32. We've never sustained above $32. So I'm betting on that not happening again. Am I going to be right? Who knows? We will see. But that is the level here that I'm looking at on Crocs. So the next one I want to look at is ZS. ZS, I'm going to show you first and foremost the 2-year chart. This is a stock who just reported, well, let me just focus on the long-term chart here really quick. So we've got this. This is a new IPO that IPO'd in, is that? Yeah, 2008, March 2008. So about a year and a half, something like that, where it's been open. Okay, so we've been in an uptrend here. Here's bounce there, there. We bounced off of it a couple of times here before eventually breaking below it. And this big gap down with the biggest volume day ever on the stock. Huge gap down on an earnings reaction. Okay, this isn't some analyst upgrade or downgrade or anything like that. This is actual earnings. Earnings are really one of the only fundamental things that I factor into my trading because earnings move stocks, okay? More than anything else, earnings move stocks. Here was, just for example, I'm just going to show you, here was another earnings reaction right here. That was a positive earnings reaction, okay? Notice how I'm not saying this is a positive earnings numbers. I don't care about the numbers. All I care about is the reaction, okay? Because we only get paid by price, okay? So let's say it gaps down, but someone thinks, oh, but ZS reported good earnings. Well, it doesn't matter what you think. All it matters is how the market reacts to it. Unless you're sitting on billions of dollars and you can move the stock on your own, okay? But most of you don't have that. So we've got this huge gap down on earnings. Here's the last one. Well, not the last one, but one of the most recent ones where we gapped up at about 55 bucks, ended up going to almost 90 bucks, all right? Here's a big gap down, and it had its chance to bounce. We had this uptrend line right here. We had this major support right here. You can see it was resistance, resistance, resistance. We broke over it here, headed higher, and now it's support. Okay, I'm going to zoom in and show you right here. So we gapped down to this level, and we had some bounce attempts right here. And this is in light of, or in the face of, the rest of the market being very bullish. So we've got the rest of the market being very bullish, and then we've got ZS, which is heading in the opposite direction. All right. So we had those bounce attempts, didn't fall through, and now we're breaking the support. We gapped lower today. This is the first major gap low that we've seen, and we broke this low right here. So we're breaking that low, closing below it actually, and I definitely think that after all this sideways trading, this is building up energy right here. It's building up energy, and it's building up energy for the next move lower. It could have been building up energy for a bounce, similar to Roku right here. This is one that we actually got long at here on Roku. Down here, we sold yesterday, pretty much at the high of the day, for right around that gap fill. That was about 70% win on these call options that I bought. But anyways, so you can see here that Roku was kind of trading sideways and building up energy, and then once it broke out of that range, it headed much higher. Okay? And I definitely think it can head even higher than that. But ZS, it did literally the opposite. Okay, gap down, traded sideways, and then boom, we're breaking that level to the downside here. Okay, so there's a big difference. The next one I want to look at is CRWD, CrowdStrike. So let me move my face out of the way. I'll move it up to the right just to mix it up on you guys. All right, so CrowdStrike, and just to throw this out there too, is I just did a very extensive study on new IPOs. I created a strategy and back tested over 130 stocks, new IPOs of the last 30 days. It's a long only strategy, and so I'm saying this because I've actually studied new IPOs very extensively. Okay, I'm not just throwing out this stuff out of my ass, which a lot of people do. And they sound really confident, but they haven't actually done the work or the research on the stuff that they're talking about. Okay, that doesn't mean I'm going to be right every time. Okay, the strategy I have for IPOs is a 63% win rate, which means I'm going to be wrong 37% of the time. Okay, but so with that said, we've got CrowdStrike, and we've got an attempt to head higher here, but then it didn't really go anywhere. And the last earnings report was right here. Notice how this was an earnings report right here, okay? Positive, headed higher, but after that, after it gapped up, it really didn't go anywhere. And we traded sideways virtually, and then this was the most recent earnings reaction right here, right? The IPO low is very, very key. It's over here to the left-hand side of your screen. It's very, very key. When you break that, when you break an all-time low, most of the time it heads low, okay? After it's been trading sideways for a while. So what happened here is we broke the low, and then we tried to break higher over it, and now we're breaking it once again, all right? So that's what I'm looking at here for CRWD. I definitely think it's going to head lower. I also had a conversation with someone on StockTwits about the comparison between CRWD and Uber. I said that it was very similar to Uber, and I'll show you the chart here. Well, Uber's a little bit older. Okay, so pretty similar chart here, okay, to CRWD. All right. Now, this person was arguing that CRWD fundamentals are nothing like the fundamentals of Uber, and that may be true. I don't know because I don't look at fundamentals. I only look at price action. So to me, Uber and CRWD very similar in that they kind of trended higher, but then didn't really go anywhere. CRWD does look does have a little bit of a better look because it did head a little bit higher than its original IPO level. But still, for all intents and purposes, it's a very similar looking chart. And here we are, we broke this IPO low right here, and it posted on StockTwits that I thought it was going to head lower, and what do you know? It headed lower. So after it didn't really go anywhere for a while, and then it breaks the IPO low, that is a very, very high probability setup that it's going to head lower. So that is what I'm looking at on CRWD. You can see pretty similar chart. Headed higher and then didn't really go anywhere, and now we're breaking those lows. Okay? So that's CRWD. So what you're looking at right now is the real-time portfolio tracker at thetradinganalyst.com. If you don't already know, I have a private membership alert service here where I share real-time alerts via text message. Both the entries and the exits are all alerted to members here at thetradinganalyst.com via text message. So as you can see, these are some of our recent trades. We have about 12 open positions right now, but just in the last 2 weeks, we've had just 5 trades that were closed out. Okay, so as you can see, the winners far outnumber the losers, and you can see the winners not only outnumber the losers, but the wins are far greater than the losses. Okay, this is just a 12% loss on these puts that I had. But as you can see, we've got all but one gain here are far greater than the loss right here. 64%, 67%. That's what, like 4 times the size of this loss right here. So yes, we have losses, but we keep them, we like to cut them quick, and we let our winners run. Okay, so when you sign up and join today, you're going to get access to these trade alerts. All right, most of the alerts are for options, but we do have some stock picks as well sprinkled in there. So you're going to get this when you sign up and you join today. Also, you're going to get the watch list. About 99% of these trades that we have and alerted to members all were on the watch list ahead of time to help you prepare for what to expect. We're not just throwing out these alerts in the middle of the day and hoping that you can follow along. We're preparing you ahead of time with the written watch list, as well as I'm making private member-only videos that discuss exactly what I'm looking for, why I'm looking for it, and the trade that we're looking to take place. So it's a great opportunity for you to get inside the head of a profitable trader. So if you'd like to make consistent returns in the market and learn from a proven trader who's been trading for over a decade, that's me, and who does so successfully and profitably, then I highly encourage you to join today. Because as soon as you join, I'm going to start sending you alerts right away. I look forward to seeing you in there, and I hope that you make that decision for yourself to grow and to get better as a trader. Most importantly, to start making consistent returns in the market. Have a great one.